Hey guys, welcome back. In today's video, we are talking about AMC to the moon, how hedge funds are on the clock, the pre-squeeze, and many more in this video. First, we're taking a look at this. AMC's performance 5 trading days after CEO Adam posted to the moon. So in 2026, we're currently up 21%. In 2021, we were up 7%. Now, this will be fun to track over the next few weeks. So the reason why we're saying this is because the last time CEO Adam has posted to the moon was back in 2021. AMC went on a 750% plus run over the 4 weeks that followed. So recently we saw Adam Aaron releasing a tweet where he ended it off with to the moon. Now I want to clarify, he did not talk about AMC to the moon, but merely said to the moon. We did say that there is a correlation between the two. We talked about how typically he's used it as code words. We've seen how he talks about different things, but really he means it for AMC. He's trying to tell something without, of course, being direct about it. Now, definitely, we've already seen how well it's performed. We've already seen AMC since that tweet have performed exceptionally in terms of the price. Now, it's of course nothing major. We're not talking about a squeeze, but we've definitely already seen from 0.93 and onwards, we're kind of seeing over a 40% movement on AMC already. And this tied in with Adam Aaron's to the moon tweet, it feels like everything is linked together. And especially with what we've talked about in the past before, what we've seen in the past is that if data repeats itself, if history repeats itself, then we're likely to be looking at another massive volatile run from AMC in the next few weeks, because there are more things that are going to be supporting AMC this time. Firstly, we're looking at Q2 still at an all-time high, and AMC now has record concessions per patron, merchandise, and retail popcorn sales. We're also sitting on 1 million HYMC options. So again, the difference between us now and us back in 2021 is that there are so much more new things that have been created. Firstly, we are in a way better position, whether you're looking at the box office or you're looking at the fundamentals of AMC. We also have to understand so much more synthetics have been created for AMC. And so when all of those have to be forced to cover, you're going to be expecting AMC to go up even higher. But if we take a look at some of the fundamentals, like we've said, because the box office has done so well, because of how efficient AMC is, we're obviously making record sales. So you can definitely expect our revenue to increase by a great margin. You're going to see the profit go up as well. More importantly, we're still sitting on that 1 million HYMC options. And we talked about how this is extremely beneficial, the return that this has made for AMC already. And so you can expect it as well with what everything's going on, with how gold and silver is still continuously going up and the demand increasing. We're going to be looking at those investments making even more money. If you want to take a look at a direct representation of how well AMC is doing, we can see we're constantly seeing AMC movie theaters basically closed to fully sold out. So it's over 90% occupied seats. We know that the movies are doing exceptionally well. We know that most people are going to AMC to watch those movies. And more importantly, we know that they're spending money not only on tickets, but what we've said with merchandise, with food and beverages. So this is why we've said the box office right now, whilst the box office doesn't dictate exactly for AMC. So the 387 million for box office is obviously for the general thing, but AMC is definitely one of the biggest, if not the biggest benefactor of this box office. And so you can understand why more and more people are realizing the opportunity of AMC. If you take a look at a potential forecast of the domestic second quarter box office range, the average forecasted range is around 2.6 billion to 2.9 billion, with a midpoint estimate of 2.75 billion. Now, this is the average forecast. We have to understand is that if something exceptional was to happen, if something else that we sort of break out, you can easily see this go to $3 billion as well. And remember, the box office itself doesn't dictate how well AMC does, because we talked about how there's ticket sales, there's obviously the food and beverages, the merchandises, all of these things matter as well. So we have to understand how AMC is able to profit off of this. And amidst all of this, amidst of how well AMC is doing fundamentally, and in terms of even the technicals on the charts, how well AMC has been doing recently, we're seeing more and more pressure. You can see massive ask wall. 167,000 versus 25,000 bid, holding price under pressure. Is this real selling, ATM flow, or spoofing? So this is what we saw on the Friday for AMC. Now, the reason why this is important is because firstly, on the Friday, we saw how AMC went up towards the high of 145. And we talked about how if AMC were to close above 1.5, it would render many call options in the money. And that would create massive pressure for AMC. So that's firstly why they didn't allow AMC to go up even higher, because they saw how close it was for AMC to hit 1.5. Now, of course, hitting 1.5 itself isn't enough. You obviously have to close above it. But the very fact they saw the price get closer to that level, it was already worrying for them. And then at the end of the day, when we saw this 30 million in volume with a spike on the opening bell, based on the great news for the theater chain, yet it ended the day at zero movement. So at the end of the day, you see it moved 0%. We closed at 135, which was the price of close on Thursday as well. Now, the reason why this is so crazy is because firstly, pre-market during that day, we already saw more volume than usual. But then when you break into that day, we still saw 30 million in terms of volume. That itself would typically mean a great move for any other stocks. But yet when it comes to AMC, we saw it go 0%. Now you pair that up with what we've said earlier with the bid and the ask comparison, you start to understand what is going on. But the very fact we are seeing the suppression, the very fact we are seeing them trying to make AMC not even move up a cent, it goes to show how much damage we are doing to them. Previously, we covered the example of if there are, a billion shares of synthetics that are being shorted right now, even with a 1 cent movement, that is still $10 million they're losing. Not to mention, there's obviously way more than 1 billion synthetics. And also, we have seen days where AMC go up even higher. But this just goes to show why they're trying to move up, prevent AMC from even moving 1 cent. Now, one of the things is, it's really not that difficult for the hedge funds, banks, brokerages, and other AMC short to locate shares to cover. All they have to do is contact the 5 million AMC apes, and we can direct them to about 7 to 20 billion we own. And the only problem is, we are not selling. Now, we've talked about this already in terms of the power that we have over these shorts, the power apes have over the shorts. Because ultimately, when they have to cover these shares, remember, the majority of the shares have been bought up by retail. So they could ask their institutional friends who are long to help them out, but ultimately that isn't going to solve the issue. For them to fully get out of this position by covering these shares, they will have to get the apes to sell to them. Now the problem is obviously we are not selling to them at the prices they want. We are only going to sell to them at the prices that we want. And we can see that because when AMC dropped below $0.1, when it was at 0.93, when Loom, people were talking about how AMC was going to get delisted, etc., no one sold their shares. And that just talks about kind of the confidence apes have. That talks about the commitment that apes have. And if we take a look at the cost to borrow, which is also another hint, a cost to borrow of 1.24 is by no means high. But it is worthwhile to note that AMC cost to borrow hasn't been this high for years, and that it didn't drop from yesterday's cost to borrow, which it typically does when moving above $1. So at a time where we're seeing AMC go up, we see AMC go from 0.93 to 1.35, hitting that high of 145, we're also seeing the cost to borrow changing and moving up as well. Now, this is already a direct example, a showcase of the demand for shares is going up. So it shows that shorts are in need of AMC shares, and typically they use it to short AMC to prevent the price. So we already see it. Another thing is that we've already seen in the past how typically these data are not true. And so what we could be seeing is that the cost to borrow would be way higher than what is shown. But the very fact we are seeing the cost to borrow increase at a time like this, it goes to talk about the pressure, the liquidity stress that we are forcing on the hedge funds. And ultimately, we have to realize this. Hedge funds are on the clock. Time speeds up based upon the eternal success of AMC. They're on full defense mode now, while every move is an attempt to buy more time. because to them the future is unknown, and in their head, if they can buy more time, the possibility of us selling or having to sell is still on the scale of probability. As they're in self-preservation mode, that's the best strategy they have, considering that they're trapped in here with us. And so this is something we've mentioned in the past, how ultimately time is on our side. The reason why I say this is because they believe that there is that possibility that if this goes on any longer, apes would sell. Now, bear in mind, they've had this mentality from the very start. They thought if we prolong this for 3 months, everyone would sell. And then when 3 months passed by, no one sold. They thought, okay, if we prolong this for half a year, maybe everyone would sell. When that time came, no one sold. And they thought about this so on and so forth for a year, 2 years, 3 years, 5 years, and where we are right now. And so during this, they keep on believing that we are going to sell because the time is passing, but little do they know we are only buying more. What's secondly most important is the fact that another reason why time is on our side is because by us holding onto AMC shares, it costs us nothing. Obviously, it costs us the initial investment, the initial cost of buying these shares, but after you bought these shares, they don't cost you anything else. On the other hand though, for the short sellers, not only do they have the original cost of shorting AMC, but remember, they have to finance their short positions every single day. By holding on to these positions, it's already costing them money. And this goes to talk about how time is only eating into their capital. And so when we realized that AMC's enemies could not destroy them while AMC was unprofitable and high debt, and they sure as hell are going to destroy them while they are profitable and a shrinking debt with box office records and 5 million loyal shareholders. And so this is why we know that the short is ultimately going to give up, because the time for AMC to go bankrupt, the time for AMC to have ended was during lockdown, was during when it had zero revenue, zero business. The very fact they couldn't get AMC to break then, they won't be able to get AMC to break now. And the same applies for the apes as well. Now, if we take a look at this firstly, firms including Banks of America, Barclays, Deutsche Bank, Goldman Sachs will start selling the derivatives next week, with more banks possibly to come. Now, this is looking worrying for the short sellers, for the market makers. The fact that they're selling these derivatives. And one of the things is that for those of you who looked at GameStop and AMC stock charts, you know that they move together because of derivative baskets of securities. So short squeeze in GME would equal short squeeze in AMC, and obviously vice versa as well. We've always talked about this. And now we're seeing how those baskets of derivatives are starting to eat into the banks, are starting to become so toxic that they can't even hold on to anymore. Hence why they're trying to sell these derivatives. So when we talk about AMC to the moon, when we talk about the signs that we're looking out for, these are the signs that are being given to us. You can see how it started, 2021 pre-squeeze versus now. One of the things we talked about is that when you look at historical data, before the 2021 jump, the price movement is moving in a way that's so similar to the price that is moving currently. And so if we're using this data, if we're extrapolating previous historical data and apply it to now, we're looking at a very similar movement. And so with everything we just talked about, not just because we're seeing a similar pattern like we did back in 2021, but because we've seen how well AMC is doing, because we talked about the derivatives, the baskets that are being sold, you start to see why everything makes sense. When you take a look at the technicals for GME and AMC, you can see how well we're doing as well. And we have that momentum going on. And so right now, we're going to be looking at potential big things to happen very, very soon. For the reverse repo, we're looking at 0.4 billion. The GME volume is also dead quiet, and it just feels like there's the calm before the storm. This is something we talked about already, but it's in terms of when we talk about the timing, when we talk about everything that's ongoing right now, it's extremely important to keep up to date. Another worrying thing is currently we just saw $115 million being liquidated from the crypto market in 60 minutes. Now, this sort of news you would see so often, but it just goes to talk about the volatility and the collaterals that's disappearing. Now, the reason why this is happening is because of the geopolitical news, where Vice President J.D. Vance says the US failed to reach a deal with Iran during negotiations in Pakistan. Now, this happened over the weekend, so you can definitely expect going into Monday, we're going to see this have an effect on the market unless we see news before that. But you can already see how this is having an effect on the crypto market, and it will have an effect on the general market as well. So for those of you trading NASDAQ and ES, this is something that you need to definitely watch out for. Another big thing is US dollar reserve is plummeting lower. So if you want to talk about in terms of fear mongering that's happening right now, this is what we're seeing. And then the biggest thing that we've been talking about recently, the private credit market, you can see this. Wall Street is trying to launch a new credit default swap index tied to the 3 trillion private credit market, giving investors the first structured tool to short or hedge. Now, this is extremely worrying because we just talked about this, where recently the private credit market is crashing, where we've seen a record $14 billion in redemptions from private credit fund. And we talked about how the withdrawals is at an all-time high. You can see half of those requests was met, leaving 7 billion in unmet redemptions. And so this is just talking about the stress and the run that is happening right now. And is why we believe a market crash is happening very, very soon. As always, this is Financial Advice, and I'll catch you guys next time.